With interest rates still fairly low, we've been helping our clients refinance a record number of student loans and mortgages. And as many of our clients are getting a bit of help in the process from parents, family, and good friends, the question that keeps coming up is this: what's the difference between a cosigner, co-borrower, and guarantor? By the end of this video, you'll know what the difference is between the three, plus how they impact your chances of getting approved for a new loan, and possibly even helping you score a lower interest rate. For our loyal subscribers and viewers, welcome back. We love you guys. And for those of you new to Diamond NestEgg, welcome to the #1 place to learn about money, insurance, and retirement. I'm Jennifer, first-generation American, and I've spent most of my life in finance. Started working at banks like JP Morgan and Goldman Sachs at the age of 17 and graduated top of my class from NYU and Harvard Business School. And now I work with companies like Bloomberg, WeWork, and Walker Edison, teaching their employees all about personal finance. Let's talk about cosigners first, because this will be the most relevant for the vast majority of you watching this. A cosigner basically vouches for you and helps you qualify for a loan that you would otherwise not be approved for. And as we mentioned earlier, a cosigner might even help you get a lower interest rate on your loan. You can add a cosigner onto almost any type of loan, including student loans, personal loans, and auto loans. A cosigner can be a family member or even a friend. The main thing to note is that your cosigner should have better credit and in most cases, a higher income than you. In our experience, adding a cosigner with worse credit and or lower income than you will not help your case. That's because your cosigner is legally responsible for paying back the loan if you, the primary borrower, can't. And in the majority of cases, your cosigner would still be legally responsible for repaying the debt even if you pass away or become permanently disabled. In a limited number of cases, your cosigner can be released from the legal responsibility of loan repayment if you pass away or become permanently disabled, but this is something you should check with your lender on before signing your loan documents. One big advantage of having a cosigner versus a co-borrower is that your cosigner may be released from the legal responsibility of repaying the debt if you, the primary borrower, has made a certain number of on-time payments. For those of you with student loans looking for a cosigner release option, check out this video here on Common Bond. Common Bond will release your cosigner after you've made 24 consecutive on-time monthly payments on new student loans or after 36 months on refinanced ones. Laurel Road, in this video here, will also release your cosigner after you've made 36 consecutive on-time monthly payments. If cosigner release is important to you, make sure you check with your lender first to see if this is an option. In most cases, it's not. As we go through an overview here of student loan lender SoFi. With SoFi, like with most lenders, the only way to release your cosigner is for you to refinance once your credit and your income improve. So what are the main differences between a cosigner and a co-borrower? Difference number one, from the lender's perspective, your co-borrower shares responsibility for repaying the loan, just like your cosigner does. But unlike with a cosigner, who only ends up paying when you can't or won't, your co-borrower generally expects to share responsibility for making payments. Difference number two, under normal circumstances, your cosigner doesn't benefit directly from the loan that he cosigns for you. For example, if you add a cosigner onto your car loan, you generally wouldn't put their name on the title of the car, meaning your cosigner wouldn't actually have an ownership interest in the car, even though he's legally responsible for the loan payments on the car if you were to stop paying one day. A co-borrower, on the other hand, does benefit directly from the loan that he co-borrows with you. The easiest way to think about this is within a family context, and I'll use my own family as an example. When one of my kids goes to college, many years down the line, and needs to take out student loans on her own, under her own name as the owner, but she doesn't qualify, maybe she doesn't have a long enough or strong enough credit history, this would be a co-signer situation. I would co-sign her student loans, or my husband. My daughter directly benefits from the student loans, not us. She is directly responsible for the loan repayment, not us. We only step in when she can't or won't make the loan repayment, which we, of course, hope won't happen. Think of your cosigner as taking all the risk and not getting any of the reward. Not a great deal for your cosigner. So they either really care about you, trust you, or in most cases, both. On the other hand, when my husband and I buy a home together, we are co-borrowers on our mortgage. The house is in both our names, we both own it jointly, we both have a legal right to the house, and we both benefit from it. If the house increases in value over time, my husband and I both share in the upside. And if the house decreases in value, we also share in the downside. And the mortgage that we get from the bank is in both our names. We also hold that jointly. We're both equally responsible for making on-time payments. That's a co-borrower situation. Now, when would you choose to go down the co-signer route versus the co-borrower route? Co-signing is usually the way to go if you know that you want to be the primary borrower, the one that should be receiving the monthly bill and therefore responsible for repaying the loan. Your co-signer is only there to help increase your chances of loan approval or to help reduce the interest rate on the loan. Co-borrowing, on the other hand, is the better approach when you and your co-borrower want joint responsibility of the loan as well as joint ownership over whatever that loan is used for, such as a home, business, car, or boat. Guys, if you're enjoying this video or learned something new, please do give us a thumbs up and hit that little subscribe diamond in the corner as well. This tells YouTube that they should keep pushing this video out to folks like you who want to learn as much about the world of personal finance as possible. It also tells me that we should keep pushing out content like this for you. So where does the guarantor come into all this? A guarantor, for most of you watching this, is specific for renting an apartment or a house. If you're trying to rent a new apartment and your future landlord has some doubts on whether you're financially capable of paying your monthly rent on time, your future landlord will most likely ask for either a guarantor or cosigner. In this situation, a cosigner is treated like an additional renter. Your cosigner is legally responsible for the rent just like you and can live on the property just like you. In the majority of cases, your cosigner is a roommate who also signs a lease on the dotted line next to yours and is responsible for paying a part of the rental fees. Compare this to a guarantor. It's a bit confusing, but a guarantor in this case is like a cosigner for a student loan, like we talked about earlier in this video. Your guarantor, again, someone with better credit and income than you, is there for additional support to convince your prospective landlord that you're worthy of the apartment and can pay your rent in a timely manner. If improving your credit is something you're working on, take a look at our videos here on the 5 ways to boost your credit score and the target credit score you should be aiming for. So your guarantor, when it comes to an apartment rental, agrees to take legal responsibility for your rent if you're ever unable to pay it. Unlike the cosigner on an apartment lease, your guarantor doesn't have any rights, doesn't receive any benefits when it comes to the property. He can't, by law, just decide to move in and live with you in your apartment. That apartment is yours to occupy. Your guarantor is just there for when things go wrong to guarantee that the landlord still receives the monthly payment. So for example, if my son were to rent an apartment one day, but his future landlord thinks he's a bit young and can't really afford such a nice apartment, my son's 9, by the way, he won't be renting an apartment anytime soon. Anyway, if the landlord wants some additional assurance that my son will pay his rent on time, my husband could sign the lease as his guarantor, or I could do it. And if my son were ever unable to pay his rent, then my husband or I would have to step in and pay the rent for him. Moving out for the first time is a big deal. If this is you, like some of our younger clients, and you need an expert's help on working out your budget and your financial goals, drop us a note at jennifer@diamondnestegg.com to see if we can help you sort out your finances and get you on that path to building generational wealth. So some important things to remember when it comes to your guarantor. If you're living with roommates and your parent is the guarantor, your parent would be on the hook for your roommate's rental payment as well, should any of them not pay their portion of the rent. Your parent is responsible for the entire rental payment, not just your share. So if this is you, Make sure you have trustworthy, financially responsible roommates. Some rental markets and some landlords use the term cosigner and guarantor interchangeably, so always read the fine print in your contract to see which one they actually mean. When it comes to being a guarantor, cosigner, or co-borrower, it's a huge responsibility. Ultimately, you are the person that is legally and financially responsible for making payments if anything goes wrong. Similarly, if you ask someone to be a guarantor, cosigner, or co-borrower on your behalf, that's a huge responsibility for you too. If you're not financially astute and miss your payments, you're putting your credibility on the line. Not only that, you're also putting on the line the credibility, credit history, and financial resources of someone that trusted and cared for you. So tread with caution when you ask someone to be a guarantor, cosigner, or co-borrower. Guys, we hope you enjoyed this video and learned something new. If you did, please don't forget to give this video a thumbs up and the subscribe button a gentle tap. We'll be back next week with another money-saving, wealth-building video just for you.